Mr. Wennink, fourth quarter and full year sales are in line with guidance, with 1.8 billion of sales during the quarter. What supported this level of sales?
What we saw in the fourth quarter of last year was that let's say the three main segments of our business, which is the memory business, the logic business of our foundry customers, and the microprocessor business, all came together for the first time since a long time, and they started to accelerate in the same quarter. So we had very good memory sales, we had good logic sales, and good microprocessor sales, and that led to the record quarter.
What should we take away from the fact that ASML performed so well during the quarter?
I think there's a few items that jump to mind when you ask a question like this. First of all, is clearly that in the three main segments that we have, business was very good. So they all came back together, you could say, logic and memory and microprocessors. But on top of that, we've also seen an increase in our service and field option service sales, which is particularly important. That topped 400 million, which was a contributor to the top line. And we should not forget that with a record quarter of 1.8 billion sales, we have to give a compliment to our operations people, because the company is able to, on an annual basis, to do more than 6 billion in sales.
And is this a sales level for the quarter that we can expect to see going forward?
When I look at the sales of the fourth quarter and I try to project what that means for 2014, we see, at least in the first 6 months, a continuation of strong demand from our logic customers. That is to support the 20 nanometer node. We see the ramp up of the next node in microprocessors, and we see a return of the memory business, particularly our DRAM customers have a strong demand for our leading edge machines. That's a qualitative description of what we currently see, which, let's say, from a numbers point of view, translate into our guidance for the first 6 months of about 3 billion. But all in all, it forms a very solid basis for the year 2014.
For the full year, you can be more specific?
I cannot be more specific for the second half, because we do have indications for, let's say, what can happen in the third quarter, but the fourth quarter is still almost a year away. So that means that I'm still a bit hesitant to give you guidance on the total year. But like I said, the qualitative guidance on the three segments, plus the very solid first 6 months, makes us feel good about the year.
When we look back for a moment, year-on-year sales are up, nevertheless your net profit is down. What is the explanation for this?
There are two main reasons for it. This net profit went down, first of all, because we had approximately 140 million euros of costs that were related to the Cymer acquisition. Those are largely bookkeeping adjustments, is non-cash, but it goes through the P&L, so that will make your net income lower, about 140 million. And the second point is, I think it's more important because that is the long-term future, is our decision to step up the investments in R&D. I mentioned a few quarters ago that we're entering a period of investments. We're investing heavily in deep UV immersion technology, because that is the technology that is going to drive the business of our customers for the next 2, 3, 4 years, and EUV. And those two investments, they coincide. And that means that we are stepping up the R&D, which reflected in the results of 2013. So two reasons. One is the purchase price accounting adjustments of Cymer, and secondly, and more importantly, R&D.
Your gross margin increased to 43.6% from 40%. Why is that?
The increase in gross margin in the fourth quarter had to do with a higher level of sales. So we cover our fixed cost better. But also the mix is very important. We started shipping our 1970C in multiple systems in the fourth quarter with good margins. They're very advanced products. So the mix of product is also every quarter is an issue that drives the gross margin.
Your outlook looks good. You expect strong demand. Nevertheless, when we look at the PC business, that's still very weak. How do these two reconcile?
Yeah, there was a time when everything was about PC, and that of course has changed. When we look at the application space where the devices of our customers are actually used, then you see that application space is much broader. We all know about the mobile space, but it's more than just mobile. It's automotive, it's PCs, it's servers. So we do not depend on PCs alone, and certain of those segments, like the mobile space, is still very, very strong. They need more advanced logic chips. They need chips with more memory capacity, and that all drives our business.
With regard to EUV, how are you progressing with EUV?
We are progressing well. With EUV, it's very important to increase the productivity of the machine, so it means the EUV source power needs to go up. We are currently at levels whereby we can support about 50 wafers per hour. But next to that, we have made progress on the stability of the machine. It has to do with keeping the EUV collector clean. That has to do with the automated control loops. That has to do with defects on the photo mask. Those are all developments over the last quarter that have turned out well and that support us in our focus on bringing this technology to the market and bringing 70 wafers per hour in 2014 and 125 in 2015, and we're well on track.
What are the criteria that customers will evaluate EUV on to take it into production?
It's a very good question. Ultimately, Moore's law, it's all about making things smaller, is an empirical law of economics. So ultimately, customers will decide on economics when they will take EUV in production. Now, for the first risk production, that means 50 to 70 wafers they want to start with, and then move on to 125, whereby the tool needs to be available, needs to be stable over a certain period of time. So they will look at throughput and they will look at stability of the machine. And that translates into a price per wafer, and that is the economics that I talked about.
Last year you shipped the first TWINSCAN NXE 1970C system. What are the benefits that it delivers to customers, and how is the initial take-up?
The 1970C is our new immersion product. It's a very important product because the introduction of EUV is dependent on the economics. So our customers are planning for their next generation a solution that is based on immersion, because they know how it works. So that's, you could say, their low-risk introduction scenario for the next generation chips. For that, they need a machine with which they can do multiple patterning, multiple passes for one layer. They need a very advanced tool for that, and that is the 1970C. So it has new levels of what we call overlay, which is the positioning accuracy, new levels of productivity, and that makes sure that they can plan a low-risk introduction strategy, for instance, for the logic 10 nanometer node. And that's why this is a very important development, and we've shipped the first 5 systems last year. We have 14 of those systems in backlog, so there's a high expectation level of that system for 2014.
You already mentioned R&D spending is up. It increased to 280 million this quarter. Why this increase, and do you plan to continue this level of investment?
The R&D level is at 280 million, and that's a need because, like I said in earlier quarters, we are in a phase of double investment. We're investing on leading-edge DUV immersion because of the need of our customers for the next 1 or 2 nodes to use the deep UV at the leading edge. But after that, EUV needs to come. So we are investing in deep UV and EUV at the same time. Very significant amounts, and that, by the way, peaks in the first quarter. We expect that the R&D spend, because of increased efficiency and integration of EUV R&D in Cymer and ASML, will go down to about 250 million by the end of the year, which will probably see a linear decrease from 280 to 250. But all in all, very large numbers, but necessary to support 2 very important developments, immersion deep UV and EUV at the same time.
How did ASML's cash position develop, and what does this mean for shareholder returns?
We had over the year good cash flow from operations, despite the investments in inventories, because we're building EUV machines with a longer lead time. We invested in capital in a new EUV factory. But despite that, we had good operational cash flow. That means that we plan to return that cash to our shareholders in 2 ways. One, we've decided to increase our dividend with 15% to 61 cents per share. And number two, we are continuing with our share buyback program, which was announced last year, which is a program, a total amount of 1 billion, of which we did about 300 million until now, and we will continue executing on that program in the remainder of the year.